Yo, good morning, everybody. Yo, for some reason, my back end on YouTube is tripping. Give me 1 second. Bear with me. We don't have any news today, by the way. So we're going to have to be cautious. I don't know what is happening. Can you guys hear me okay? Just let me know in the chat. Morning, Sean. Seems like YouTube kind of changed some stuff up for some reason. Not sure why. Oh, there it is. Yeah, that was strange. Couldn't find the studio portion of things. I don't know why they moved it. Seems like they moved it. But yeah, hopefully you guys have had a good start to your week. Those of you in my private group, did I not mention this target yesterday? Did we not lay this out when we were way up here? Told you guys that this regular trading hours gap, lower portion that didn't have any buy side or sell side. Right, we have that whole gap here. We had the whole gap here. But look what it did. It went right down into it because why? It's inefficient. And the market works off liquidity and inefficiency or consolidation. A good example of that is here. But yeah, I watched ICT's video yesterday, and it seems that we had more conviction in what it is that was taking place than he did, which is pretty interesting. But those of you in my private group or anyone else that's watched ICT's video yesterday, those of you in my private group, we navigated the market pretty effectively, and we're pretty solidly in alignment with almost every single point ICT talked about. Give or take like 2 or 3 other things. But the beauty in this whole thing that we're doing when it comes to trading with ICT's concepts is the simple fact that he could go into the chart, show us a breakdown, and if we understand certain things, certain PD arrays are more important to us, or whatever the case may be, ICT could see his narrative or his important points of interest, and then we could see ours, but we can still arrive at the same place. Okay, so that's the beauty in these concepts. It seems kind of disjointed when you're really new and you don't really have a lot of experience, to the point where you need every single thing that you see in price action to agree with what he's talking about. The key is knowing where price is going to go. Okay, if you can understand how to determine where price is reaching for, I mean, anything else that works inside of that is just liquidity, inefficiencies, and other PD arrays acting as gripping points as we get down or higher to whatever particular level it is that you're looking at. So if I want this low to be taken, like we talked about yesterday, as a possibility, when price breaks down, you have sell side, buy side. That in itself is a range. Okay. We actually called price going up into this as well. Talked about deferred liquidity. I taught you guys that on YouTube. We have a high resistance liquidity run. Came up into it, created a market maker buy model. Notice that right there, the high of the accumulation, and it got up there. But if you're looking for price to target, say, the downside or the upside, let's use downside for the example for now. Well, if you find your model for entry, you look to the left and you find opposing PD arrays or PD arrays that will get inverted. You look for anything that you're familiar with on this left side. And if you're truly correct on the directional narrative and where price is headed, everything that's there is not looked at as a bouncing point to turn and reverse, right? If your overall narrative is bearish and it hits a bullish PD array or inverts levels or blows past them, whenever it comes back up into it, you need to start changing the way you think and start thinking, okay, well, that's a gripping point. If this is the mountain, right? And this is the peak down here, okay? Whenever it breaks through a PD array, whenever it inverts a PD array, whenever it disrespects something that could reasonably be seen as bullish if it was to bounce and go higher, if your conviction and understanding is heavily aiming you at this low, for example, everything should be looked at as a gripping point, not a turning point. You can tell when there's a turning point. There's ways to do that. And at first it's, kind of difficult to determine whether it is a turning point or not. But putting that aside, thinking about this contextually when it comes to utilizing other points of interest as we get down to a particular level, if you have conviction behind the direction, you want to be looking at everything that could either oppose the trade, like if it was to go higher, like an opposing PD array, or any levels that get inverted as, like I said, gripping points. ICT's analogy for the rock climber, when it comes to your perspective, in terms of utilizing the PD arrays and the PD array matrix, was so spot on. And I mean, you really got to think about this, right? Because if you can put your perspective like in position to see it like that, and you can determine where price is going to go, which again, I give you guys that on a silver platter, at least how I do it here on this channel. So if you can master that, I'm telling you, like majority of the battle solved already. The rest is experience and risk management, right? But it's highly important. If you guys have any questions about bias and narrative, just let me know, okay? I know there's a lot of people struggling. For the most part, everyone in my private group, or those of you that are here with me consistently on these live calls every week, you're seeing progress. But those of you that are maybe new, both to trading or new to my channel, I highly encourage you to send me a message if you have an issue. If you watch the stuff that I do and you have a question, the dumbest thing you can possibly do with any mentor is watch the videos and not ask questions. Or watch the video for like a small amount and then just skip the rest, as if that one thing that you were looking for is the whole thing that's going to get you to profitability. Right? There's very minute nuances to every concept. So do not hesitate to ask questions. Okay. What's up, Liquidity Trading? What's up, Emmanuel? Welcome, you guys. But yeah, so I just wanted to mention that. And again, those of you in my private group, Emmanuel, you were there. Sean, you were there. We literally pointed this out ahead of time as a potential target if price was to get lower through this. We talked about this as a sell model. We talked about this as a buy model. Navigated it to the buy side off this deferred liquidity, which again is just price reaching up into high resistance levels. This is high resistance because it is a stop run prior to a down move. So trading into that, if it's going to go higher, it could be high resistance and offer deferred liquidity, which is basically price trades up into this high resistance level, has a swing low, price breaches that swing low to purge liquidity, and then it's low resistance, or you should see low resistance if you're correct, going back to the upside. Excuse me. And then, of course, when you zoom out a little bit, if we go to the 1 hour chart, I think it was the 1 hour chart. Yeah, right here. So you have the high here. I'm not sure if you guys can see this, but I hope you can, quality wise. So we have a higher high in here. So this here, if you're bearish, would be a bearish breaker, right? It did offer an opportunity within that perspective there. Okay. but we traded into a high resistance level, just like we talked about here on the smaller, you know, perspective inside this wick here. This is on the 15-minute. This is on the 1 hour, so it's a larger price swing. So you could see the fractal nature in high resistance delivery and how price treats those levels and how this deferred liquidity logic unfolds, right? You got this smaller one in here, and then you have the larger one, right? It runs up into high resistance, delivers lower, refuses to keep going lower. So all that did was take out trendline liquidity, reach down to a slight discount from this low, most recent swing low, to the most recent swing high. This is equilibrium as well. We also talked about equilibrium and how that makes it 50-50 in many cases. That's another thing that we talked about ahead of time before ICT made a video about it, right? So, you know, lots of stuff that was discussed the other day kind of shows just how in sync we are. And this is constant. It's all the time, right? Which is why I don't really spend too much time watching his videos much anymore. I still enjoy them, but we have everything we need. And everything you learn from me is going to give you everything that you really need, at least component-wise. And you can decide which style you want to utilize, aka like which PD arrays you like the most, which model you like the most for entry. You're not shoved into a mold when you're here. You're allowed to think independently. I encourage you to think independently, because many times students in my private group, or even you guys here on YouTube, will find situations where we're bullish, but you'll take a short and you'll be able to be correct, right? But then we'll also be able to take the buys. You may take a short, I may take a buy, or vice versa, and we're still able to be successful, because the way you see the market and the way I see the market are two different things. But the core foundations, the different components, or I guess categories of a trading system, all of those, they're very foundational. And I give you that stuff, so then you could form fit it into your own perspective, as it should be. You shouldn't be shoved into a mold, because you may not like the breaker. You may not like, you know, any of the other models that I use. You may like optimal trade entry, right? But if you can have the framework, the structural context that we give behind any model, right? You're able to call where it's going to go, why it's going to go there, whether it's valid or invalid, and then where your model is, right? Within the context of market maker models, Power 3, so on and so forth, right? But again, hopefully you guys understand the deferred liquidity logic I've taught you guys over the last couple of months. Because look, it happened twice in two perspectives yesterday inside this move. This one in here for the larger 1 hour perspective, for the 1 hour bearish breaker that offered a setup. Could you have taken a trade in here? Sure. Right? Do I trade Sundays? No. So would I have taken it? No. Could you have though? Can you still make sense of it? Of course. And it could be from the lens of the deferred liquidity logic. Trading into high resistance. What's high resistance? Consolidation that price is trading back into, or a stop run that leads to displacement. If we were to come back up into that, it's a breaker, right? So breakers that fail should present you with high resistance, but if it fails, you know, price is probably going the other way. If it gets above this breaker, right, you then have a high, low, higher high. So you go from a bearish breaker to a bullish breaker. But if it's going to hold up in here for a little while longer, you may see that because this is high resistance, it'll do something like this, which is just simply price trading into that high resistance liquidity and then breaking some liquidity down below before it looks to continue. So what about this low and that high? Right, so we have buy model, sell model, completed sell model. We're below equilibrium. We set a high up here and we immediately have tanked, filling in the rest of this regular trading hours gap, lower portion that we talked about yesterday. So what do you think is going to happen here? We have a low, high, lower low. Is that high resistance if we trade through it, or low resistance? in the most simplistic terms, it's high resistance because there's a stop run there. Okay. So the likelihood of this price action, especially now that we're seeing this respect the wick, right? We have a wick in here, displacement through that wick. The likelihood of it getting up to this high is a lot less likely than it is for us to see this low get taken or targeted overall. We have low resistance in here. Okay. So it should rapidly get down there. When is it going to do that? We're going to have to wait. I'm not trading pre-market open, right? I'm going to wait for the 6:30 open so we can then get at least some manipulation that's very obvious. We do see that London has not really done much. Asia was a bit quick, right, to finish off what was here. But again, now we have low resistance down there. So I'm curious to see if that objective is going to continue. And again, in order for us to be bullish, we'd have to see the midpoint here get traded fully through. By the time it gets up there, we would also be able to then switch our perspective to a buy model. So second stage distribution, it corners that piece of a price swing. Okay, so this is how we're going to operate today and how we're going to see things. So obviously, with what I just mentioned, my objective is going to be to see if we can't take out sell side liquidity. Right? You see how fast we're able to determine when price is showing components that we're familiar with. See how fast the process gets you to being bullish or bearish. We're still kind of close to the equilibrium, but you know, unless it gravitates back up into it, this is going to be what I see in price. I'd like to see this, once it breaks this low here, act as resistance. So if we were to go from that high down to that low, that is accumulation in a sell model if we're going to keep going lower. So if we are going to go lower, we also have a regular trading hours gap too. Okay. So if we are going to go lower, we want to see continuous respect to this perspective. By leaving these highs, I believe there's SMT as well we can go off of. Yep. Beautiful SMT. So now we got SMT. We have the market maker sell model completed. So there's a BPR up there. Did I say market maker model completed? I think I did. We have the regular trading hours gap that has now sell side. It's going to need a little bit more delivery to these lows, this lower level, to completely finish it off. It's just a very, very small piece. So that's a low resistance liquidity run right there. If it keeps going, which it looks like it will. We're starting to see a low high, lower low. That's a bearish breaker if it gets below that. So any return into that would lead us into this potentially. Okay. So I like our odds of being able to target down there. Unless, of course, this gets up through the midpoint from this low to that high. Or just simply breaks this and shows no respect to that, because these consecutive candles from the high up there to the low, that's your bearish breaker block, right? Block one. If we move up in time frame, we'll be able to see, I'm sure, one on one time frame. Preferably we stay in this lower portion. And then if we go even deeper, okay, we look for a larger perspective. We got this down here. So we have failure swings. Okay. At this time in here, when it swept and then went higher, when price came back down into it, this is high resistance because we have a stop run present. So what do? They set a failure swing, rallied up to a premium, respected the bearish breaker here, and then offered another, or are offering another market maker sell model. So now this here in itself is low resistance as well, because it's a failure swing. It goes from a stop run. You have a near-term failure swing there as well, so that, you know, is useful. But I like this even more, right? So this bounce higher. If we go lower, we've now created low resistance conditions. But one problem is the fact that we don't have any news, right? So it still may hang around, especially because it's been in a large range. So that is a possibility. I would like to see if we can get the sell side delivery to be offered to us. So that's what I'm going to hang my hat on, unless it gets above the midpoint here, like I said, because in that case, I would then look to try to be bullish and then go higher for a market maker buy model. Okay, and this is just from this chart, right? So if we were to go to, let me actually, let me organize some of my charts on my lower screen. Almost forgot. So bear with me for a minute. Hopefully you guys are getting value already. If you are getting value from what it is I do here on YouTube continuously, don't forget to like the video, subscribe to the channel. Definitely helps the channel reach more people. And I think this channel deserves more attention. The amount of times that, well, just the testimonials and what people say. And then, of course, what we show publicly, how it's every single day, every week, we're able to be correct. Doesn't mean that every week is profitable. You know, I still take losses even if we're correct. So I'll be the first one to tell you that I'm imperfect. But, you know, the foundations of what it is we do, I mean, they are literally unmatched. And it helps everybody that gets exposed to it. So hopefully more people see it, right? And you guys can help me with that by just simply liking the video. I appreciate you guys that go ahead and do that. Let me make sure all my stuff is up. Okay. Again, if you guys have any questions, let me know. I'm more than happy to help. So yeah, it looks like we are in a real hurry for whatever reason. I don't like when there's like super dynamic moves when there's no news events. When you're trading with no news events, and it's just a non-news day, you got to be cautious. You heavily need to rely on macros as well. Something that I didn't just point out about this right here. We actually had I pointed this out yesterday with my private group. I want to make sure I point this out too, though. Well, I guess I talked about the breaker, but this is a 4-hour bearish order block. So if we're bearish, or well, if we're trying to go higher, right? If we're bullish, that's an opposing PD array. So whether it fails or holds justifies one side or the other in many cases. So if it holds this up to the midpoint of the bearish order block, you guys know I want the midpoint or the lower 25% to be respected, or it doesn't even come to it at all, because that's highly beneficial, right? Have you ever reviewed a large number of trades and seen whether T-notes and its influence on DXY and DXY influence has led to a benefit? 100%. I have actually 6 straight years of using it. And you could see from all the calls that I do every single week that it's just undeniable the influence that the bonds and yields have. Not everyone uses it, but then again, not everyone is as accurate, right? Not everyone has as much conviction as we do behind our trades. So it is definitely helpful. It's not a be-all end-all, but if you're like me and you need like layered trust, layered reasoning as far as why you can trust something, it's just one of those things that's undeniable when you spend time on it. And again, I've spent 6 years literally using this tool, using this correlation to help verify a particular trend, the healthiness of the trend, or to help verify, um, whether I should start to lower my risk. Because if there's a crack in correlation, currencies of a country chase yields, right? The yields of the interest rates of that country. So if that's going to affect the dollar, we know for a fact, since the dollar has an impact on the indices, there's going to be a connection there that's influencing, right? And it's very, very significant when it comes to the internal reasons as far as why price should go higher or should go lower. But again, it's not a be all end all, right? Some people don't use it. I do think that it's a huge reason why I'm accurate so often. It's not a be all end all. It's not the only main thing because I use other things as well, like other intermarket relationships and seasonality and all these different things. But it's absolutely a pillar. ICT himself also talks about it, but again, it's just like anything else. Like COT, for example. I use that quarterly, but do I have to use it? Right? Can I just use other things? Sure. I could use just seasonality and the bonds and yields as my fundamental analysis and the news. But I personally, for me, it definitely does help, and I've had 6 years to prove it to myself. But of course, you need to prove it to yourself as well. All these different things that I teach or that ICT teaches requires you to build a relationship with each component. And if there's a relationship that's weak for a particular component in your process, mistakes that could be avoided will happen. A lack of trust may manifest. And I'm the type of trader that needs to have lots of evidence because, it's just my personality essentially. I don't trade them on the lower time frames, although I could, given how correct we are all the time. Uh, and then again, when there's a crack in correlation with these relationships, that's telling you a very significant piece of information as well. So if you're asking me personally for my opinion about it, I absolutely have done a lot of study on it, and it definitely has an impact. But again, if it's something that you don't want to use, there's nothing wrong with that. There's also SMT factors and an ability to predict where price is going to go coming out of a consolidation relative to the bonds and yields relationship to the yields or to the indices and the dollar. Like if the DXY or the indices are consolidated, or even the currencies, GBP and Euro, if they're consolidated and you see the bonds rallying aggressively while the yields are dropping, you're more than likely, I'd say high 90% of the time, going to see that if the bonds and yields are promoting bullishness, that consolidation is going to go to bullish. And if there's an SMT behind the bonds and yields, it's going to impact the assets that it influences at some point. Sometimes it lags, right? But that's just the nature of intermarket relationships and just the market as a whole. It's not always perfect too. So that's another reason some people don't use that or don't use seasonality as well. But more often than not, it's going to be beneficial. And it helps build more clarity, right? It's a pillar to the clarity that we have. It's not the whole thing, but it's definitely for me and my study and simply what I've shown on YouTube, let alone in the private group every week. I mean, it stands out. It really does as an influential tool. I asked this because I have tried to simplify my trading recently. Too much analysis on correlated assets leading. Yeah, so that is a good point. And if you find yourself having issues with that, then maybe again it's something that could be pushed to the side. Remember, all the things that you're looking at should support an idea that you're already determining from the technicals in the asset that you're looking at. It should be supportive. If it goes against it, it may not always have a huge, heavy influence. It may just have some stuff happening with that particular asset class while it's looking to get back in line with symmetry, like geopolitics and all this stuff. It can have a real impact and separate the assets from one another for a little while. But you can honestly, if you want to simplify it, but still use those assets, given they do have a big influence, you could simply use them to validate a trend. So if you're in like a bullish trend, for example, on the indices, you could just glance at the bonds and yields and see, does it support it? Right? Is it going higher, right, on the bonds and lower on the yields? If so, you could have some strong conviction behind, excuse me, behind your bullish direction. You know what I mean? Or again, if you see the indices are in consolidation, you can go run over to the bonds and yields and the DXY together, because that's kind of like a basket of assets that influence the indices. And you could just verify, right? If you're in consolidation on the indices, but you can see a potential reason for it to bounce, maybe it's consolidating in a bullish order block or something after we've declined for a while. If you see the bonds, yields, and the dollar promoting bullishness, you could try to seek SMT between the three indices and then expect that it potentially can go higher. And you keep a rolling study of this. So again, you can convince yourself over time, because theory is one thing. I could sit here and teach you guys all these different things. And yeah, it may make sense because I know how to use this stuff and I have done it for a while, but it's not going to directly transfer to you in terms of the trust. That's the disconnect between mentors and the traders trying to learn from them. And the people that are teaching that don't go live, that don't sit and want to answer questions and just want to throw you a course, that's why their students fail. And the nuances really get to the students and create that failure, right? But that's part of the reason why I'm live all the time, is to show these things. And again, every single week when it comes to the overall risk on, risk off analysis, which includes the bonds and yields, every single weekend I'm literally showing you, so then you can verify from Sunday to Friday and then determine whether it had a pretty solid impact or not. And I would go out on a limb and say that it absolutely has been super, super clear. Not that I'm using the bonds and yields to determine every single trade setup, but when it comes to the narrative and me confirming whether it's trustworthy to go lower or to go higher, from that context, I'm absolutely using it. But that doesn't mean that if the bonds are going higher, or if they're not going higher at the moment, that I'm not going to take a buy in the indices if they look like they're going to go higher. That's not at all the weight that it has. It's just a supporting factor. And yeah, so hope that kind of clears it up a little bit. It kind of gives you a new perspective potentially on using some of these things. But again, it's something you want to spend time on slowly but surely. You don't want to obsess over it. You don't have to do that. But I do encourage you guys to have a rolling study of these types of things. Let me see. Thanks. Yeah, no worries, brother. What time frame do you think influence needs to be considered? Higher time frame, never lower time frame. Nothing below the 4-hour or daily chart. Everything beyond that, beautiful. You start going below that, that's when you're going to really start being tugged in many directions. You just want to see the higher time frame perspective. Where is this headed towards in general? Because whatever that's doing, I'm assuming that it's going to have an impact because of all the time that I've been able to study this with my analysis, right? And you'll be able to have that same perspective too at some point. Or maybe you'll just discover that you don't want to use it. And again, that's not going to make you less effective. It's an extra layer if you're like me, and you're someone that needs that extra confirmation. It's just an extra way to build clarity, And again, over time, when you do this analysis from the higher time frames and keep that rolling log, what I have to say doesn't matter, right? You'll prove it to yourself whether it's effective or not. And I think you guys will be very pleased at what you discover. But again, it's one of those things that takes a little time, just like seasonality. Do I use seasonality every single day just because I like to use it as a reference for like every month or every quarter in terms of the sentiment? No, right? I'm not going to take a short today because seasonality is telling me that overall it's doing something. It may have an influence if it's got bearish seasonal influence and I see a short position unfolding. I mean, it's going to add conviction to my trade setup and the reason that I want to target the lows. It's going to make it more powerful so I can make a quicker, trustworthy decision. Does that mean I'm correct all the time? Of course not. Sometimes it'll be a little sketch, especially when there's a lot of stuff happening. But there's a way to use certain tools and a way not to use them. And again, that is why it's so important in many cases why you have to find someone that's worth listening to, right? That knows what they're doing, because most people don't know. And if they try to spew this stuff just to sound smart and claim it's like a be all end all, you quickly find out that, it's just not the case. And honestly, most of these people don't know how to use any of this stuff. So it gives things like seasonality and intermarket relationships or COT a bad name. It's not a be all end all. It's not something that I look at every single day and then determine, okay, well, it looks like it's going short because it's, going short here. And the seasonality says overall, I'm just going to make a decision. It has to agree in the chart, right? If it doesn't agree in the chart, then I put some of these things to the side. Like over the years, sometimes there's been, even this year, there's moments in price where it's not going to have that correlation, right? It's not going to have the influence that I normally want it to have. So all that simply means is I'm going off of the other assets in terms of the intermarket relationships, and I put the bonds and yields to the side, and I lower my risk, because overall market symmetry is the first stage in identifying high probability conditions. So if I can't have that market symmetry, automatically I'm lowering my risk, at least by a quarter, right? If I have 1%, I'm going to 0.75%, right? And of course, you fit that to where you're at with risk and whatnot, and your size account and whatnot. But yeah, it's just added context. And again, if you don't like it, if it seems like it's too much, and you have studied it for a while, then again, it's just like with all the PD arrays, you don't have to know every PD array. You could still be successful, right? Like you don't need ICT's Reaper, okay? You don't need even a breaker. They're very useful because it's very common, and there's a context that's assisted by understanding them, but you don't need them. You could keep it simple. Use like 3 or 4 PD arrays that you like. Try to solidify the bias and narrative process that we have, and then just go from there. Just manage risk properly. Okay. I guess it depends on analysis and time frames. It's going to try simple. Premium discount, fair swings, high resistance. Look in Q. Let me see influence, because I like to trade in Q at the 30-minute, 1 hour liquidity, and 5-minute entries. I just wonder if T-notes are ever going to help. Yeah, so it's not going to help you with day to day, like I mentioned. Maybe it does, right? Sometimes it does, but for the most part, you want those closer intermarket relationships to agree. And it's a macro perspective that we utilize the bonds and yields for, not a daily perspective. Okay, so it's the whole, like the monthly, quarterly perspective. Where are we headed towards? Or even sometimes the weekly, if it's all in alignment. But it's definitely not something that's too significant when it comes to the lower time frames. I guess you can say it is, because it is helpful, because you're getting the larger perspective, which helps you know where the higher time frame narrative is going, or it helps you support that higher time frame narrative, and that higher time frame narrative being solidified obviously trickles down to help you on those lower time frames, so you have conviction when whatever model it is that you like to use shows up. I have to say you are very well spoken. I appreciate you. I appreciate you for saying that, brother. Well, it honestly, it's taken a while. If you go back and look at some of my old videos, it's taken a while. It took me quite a while to get comfortable. See, there's an right there. It took me quite a while to get comfortable with being on camera and trying to present things in a way that's clarity inducing. Obviously, I'm not perfect. Nobody is. But at the same time, it really does help when you know what you're talking about. So I appreciate you saying that, brother. Sincerely. Do you know Trader Tom? Yeah, I know Trader Tom. I've heard of him. Yeah, ICT and him had a little beef or whatever. Again, I'm a purist, so I don't try to concern myself with really anybody's perspective. I use solely ICT's concepts, because I noticed that when I tried to mix things that I used to use, it waters down some of the things that I want to see, and the signals. It scatters my brain. When over the last 6 years, I've been able to discover that only using ICT stuff is completely enough. And of course, if you're using something else, only those other things are enough as well. But hopefully the source you're following actually proves it and can come out live and walk the market with you consistently with an organized process that doesn't change all the time. The markets aren't random. So why would I think that things are random and use a bunch of random things? This is, in my opinion, of course it's just my opinion, but this is the market. This is how it operates based on the evidence that I've discovered. At least that's what I've been able to prove through my studies. And it's on every time frame, every market, every day, every hour. So yeah, he's definitely a profitable trader from what I've been able to gather as well. So no shade against him. It's just, just some perspective. Do trades. Let's say it's the same. ORB. Yeah, I think ORB, just like many things, if it seems similar to ICT's concepts, it's an absolute ripoff of ICT's concepts. I wouldn't doubt it. I mean, this stuff is undeniably just amazing. So he's changed the industry, that's for sure. And he's now the biggest trader on social media, essentially, that's not flashy. The only one that has one of the most massive followings, the highest watch time. I've ran data on his channel. He has the highest watch time, the most attention that's being spent on his videos than any other trader that makes content. And there's a reason for that. People wouldn't sit and spend hours and hours and hours watching the stuff if it wasn't true, if it didn't work. And they couldn't go in, learn something, and then go and try to find it and then see it in the chart. If that wasn't a component that's present, nobody would watch his stuff. They'd hear it, think it's cool, go and look for it in the chart and say, well, this is BS. I can't find it. But that's not the case. You go in and you see it in the chart, and it hops off the chart. You never forget it. It's very sticky stuff. So that's my testament to his concepts being amazing. But of course, there's going to be people that rip it off. There's lots of people. The ORB goes back forever, but it's just yeah. See, I don't like that. Why would you want to have a career where your trades are a coin flip? Mine's not a coin flip. It's absolutely not. There's times when it is. Like, we talked about being at equilibrium. It's kind of a coin flip, right? It could go up, break this and go higher, or it could break down, create a market maker sell model and go lower. Now that we've committed to price going lower, we set a high, and now we made high resistance liquidity run up here. If it was to trade back, it's more likely, in my opinion, for us to then look to target this failure swing. So we've now derived an opinion that is now one-sided, right? And of course, if it comes back into this too deeply, I'll be back to 50-50. But I'm like high 80%, 90% that it's going to break this. If it takes this low out, I'm as confident as I can be, especially if dollar gives a rally at this point when it breaks this low, that we're going to target this low, and then this trend line liquidity will be our main objective. And maybe even this at some point. Maybe not this week, but we may get close, and then the next week, may pull up again and then try to reach for that if dollar stays strong. Let me see. I think he's mental. Hey, it is what it is. I think a lot of these people that are traders, that are a bit off their rocker, I think that's a natural thing. Some of them are like really crazy, like lunatics, and they still make a lot of money selling stuff to people, which is crazy because they don't show any proof. Especially they especially don't come out and do what we do. I put my neck on the line every time I'm live. How embarrassing would it be if I didn't know what the hell I was talking about, coming out and getting it wrong every single day? But that's just not what happens. But how embarrassing would that be? And people still do it, right? Like Mamba FX. He's a cool guy. I talked to him, actually. He watched some of my stuff. But I followed his chat or his signal service, and I lost every single trade setup. While there was mention of successful trades, I'm sitting there like, what did I miss something? But no, I was following it exactly as was being portrayed, and I lost every single trade step. Not one was successful. This was 2 years ago when I did this. So I was like, there's a lot of people that look nice, right? They got very good marketing skills, but they're just, I don't know. I mean, he maybe makes money on his own. I don't know. If he does, great. God bless him. If he doesn't, it is what it is. People fall for it. So, and I don't think he comes out and does what we do at a minimum either. So yeah, no shade, right? No shade, but it's just a fact from my experience. Maybe someone has a different experience, but that's my experience. So yeah, see, yeah, I mean, you being in the industry for a little while, you start to see like, okay, Mr. Lambo, okay, Mr. Penthouse, this and that. First of all, most of them are renting those. I don't think Mamba FX is. He made a lot. He's made a ton of money off signals and a course, I believe. He may just have a signal service. It's the only thing that I saw, but they make a ton of money. It's very easy to do it. I can very easily come out here and be like all these people, but I don't want to do that. The importance to me is teaching and getting you guys to learn and take away something that you can carry for a lifetime. Not, hey, I'm going to get rich off selling you a course, even though I could. I do have mentorship because there's people that see what I do and want to work with me because the skill set itself, not because my lifestyle, not because I'm shoving a Lambo in your face, but because what I talk about works out. Maybe today will be a similar experience, right? Sure seems like it, right? And hopefully it makes sense as far as why our opinion is to go lower. But yeah, just like ICT as a minute. Yeah, there's no worry, no problem with that. A lot of people don't like him, but it's the key is separation of the man and the concepts. If you feel that way, because just because you don't like someone doesn't mean, like Apple, for example, if you don't like the CEO, you're not going to buy their iPhone because you just don't like him. No, it's a good product. So you're going to buy the product whether you like him or his beliefs or not, So it's a separation of a person and the material, because the material is undeniable. And if you don't take his advice, because he's done a lot of antics, the Robbins Cup and all these things, and didn't follow through. If you don't want to take that as an example, you can just come to a channel like this. You could look at people like Jade Cap, Trader Kane, or anybody that's on the leaderboard of all these prop firms that are in the top 10. The highest payouts in prop firm history have come from 2 ICT traders. I mean, if this stuff didn't work, that wouldn't be possible. And they say it's because of him. And they're purists. They use his concepts. That's the main foundation and core of what they do. So I mean, that alone, even if you don't like ICT, is enough for you to go ahead and investigate. You know what I mean? So the proof is everywhere that this stuff works. And I mean, it's incredible. So it's good that you have the perspective of, the fact that you may dislike him as a person, but you do like his teachings and see that there is value. I can respect that. Hey, now Apple sucks, man. Touche. I've had Apple. I never had a problem. I've heard horror stories, but I've never had a problem. I have other backups too for my data and whatnot, just in case they do present me with one of their horror stories. But yeah, they're too expensive. But I've because once I have a problem, maybe I'll think differently, but I've never had a problem. I know ICT had an issue too before he got all his stuff deleted and whatnot. Crap. Whoops. Accidentally messed with it. But yeah, I have a lot of respect for Imam. Oh yeah, I've heard of him too. Yeah, I've looked at some of his stuff. He is obviously making he shouts out some people that are frauds, but The thing is about ICT is very misunderstood. He's never spent a dollar in marketing, and he's ran up accounts in front of his private group. I mean, he's ran them up. He feels that he doesn't owe people that are learning for free, who will complain and quit anyway, any real explanation, because he also comes out and does it all the time as well. Points where price is going to go weeks in advance, and it goes there. So he uses that as the proof, which, for some that's enough, right? But for others, they want to see active like every day at a minimum, and to each his own, right? And if they don't like it, then they just move on. But a lot of these people that shout out people as frauds, some of them are doing it to get clicks, especially because ICT is a cash cow. Just mentioning his name because of his persona and what he's built, just the mention of his name boosts views, whether it's good or bad. And it brings him publicity by them doing that. So he likes that. He likes where there's smoke, there's fire theory, right? If you can cause turbulence, you get people talking. You get people talking, they check you out. They check you out, you get views and you get money, right? Or at least attention. Attention then leads you to his concepts. His concepts of work. He has the most profitable trading students in the whole industry. And so you start to investigate. And some end up not liking him as a person, but use his style to trade. And then some are, some hate him and just refuse to even learn his stuff. And then there's others that love him, and appreciate what he's done. So because those huge extremes are present, that's why he's been able to grow. So, and he's talked about how that's calculated. So Imam Trade, he is definitely pretty interesting. I've been aware of him for a while. I would love to debate him on the validity. Yeah, I would definitely. Well, then again, I don't really, people that hate ICT, they're not going to be convinced, no matter what you say. Even if you sit there and run up, thousands of dollars. I mean, they don't like him, and a lot of times they have something to sell. So of course they got to be opposed to him, because if they're not, people are still going to have the chance to go and look at ICT stuff, and it works undeniably. All it takes is a little bit of time spent, and you eventually see it. So of course they don't like him. That's another reason why a lot of these people have so much hatred, because he calls them out, and people think like, what the hell? Well, he's talking shit about this guy. Let me go investigate. Then they investigate and they get stuck. The hooks get put in them, and this stuff is sticky. The stuff that I teach here on YouTube and in my private group that I've learned from ICT over the years, it's very sticky. Once you see it and it starts to make sense and you look at the chart, you'll never look at it the same ever again. Like market maker buy and sell models is one of those things. Balanced price ranges, the understanding of that, it's one of those things. Power of three is one of those things. You can't unsee it once you get a grip of it. And, you're forever convinced. So it'll always be a part of your trading. That's the beauty in the concepts. But again, I don't agree with a lot of his antics, but at the same time, he's a business owner and that's how he wants to run things. That's great. I need to know how to make money because I'm trying to support my family. I could care less who's teaching it. If it works and it makes sense to me, I'm going to adopt it. And, ICT was that outlet for me. So, and I lost a lot of money, wasted tens of thousands of dollars on education that didn't work. And finally, things started to make sense. So coming from that to ICT's concepts, which gave me clarity, the more that I poured into it, the more time I spent, it got a special place in my heart with his concepts. And maybe there's other people that you guys think that way about too, and there's nothing wrong with that. But I do think that being a purist with whatever you're trying to use is the best idea, because you don't want your mindset pulled away in too many directions. You also don't want 500 mentors that you're learning from, even if it's about the same concepts. Because everyone has their own perspective, their own style, their own way of using the concepts. They have their own models, their own things they find important. So if you learn from one person and you like their stuff they're teaching and it's starting to click, if you go into another person's education it may contradict everything that was being taught, even if it's the same concepts, because there's a personalized approach. And some of these people are renaming things, like they're trying to make a name for themselves when they could really just look to make a name for themselves by showing their skill set and being a purist. You know, you should credit people that have helped you. And these people, a lot of these people don't have, you know, the respect to do so. And it clouds the whole industry, at least the ICT realm. Let me see. ICT respects people who put in the work. If you could put past the, like, he hasn't, like, this stuff is not true. He's even came out and said that's not true. It was just a persona. And it got clicks. It did what the objective was, to stir people up. The Robbins Cup, right? He said he was going to get in and didn't. Said he was going to get in and didn't. That makes people talk about it aggressively on both sides. It's hard to defend, obviously, but he wanted it to be that way, to kind of make students sever their relationship with him and go do it on their own. And he wanted people to not mention his name as well. He's pissed off. So he mentioned that that's something he did on purpose, right? But again, he's already proved enough, right? He's ran up accounts in front of us. I mean, he's done these things, just maybe not for certain people's eyes. And that's why he has a core audience that's like fever pitched, because they know. And the people that are on the outside that, you know, either don't put in the work or just haven't been around long enough, they fall victim to the people that hate. And I mean, it's just a lot of controversy, right? Controversy sells and gets a lot of views. So yeah, like I said, if we get back to the chart, by the way, we're going to continue to go lower. And we did, in fact, deliver through this in a low resistance fashion. I'm more so kind of waiting to see the first 30 minutes. We don't have any news, so I want to get us closer to a macro. When there's no news, I refuse to take a trade outside of a macro. Generally, I'm trading inside macros anyway. Those last 10 minutes, first 10 minutes, or the way I use it, the last 15 minutes, first 15 minutes. Sometimes it starts a little sooner. But again, our overall analysis leading up to where price is at currently, and the assumption that this run up to go lower, completing that buy the sell model, leaving it as a balanced price range, that's beautifully operating as well. You notice how it's somehow, or for some reason, refusing to even attempt to come up and take these levels out up here. That's because it's being driven by a balanced price range, bearish. Okay. We got the low of the regular trading hours gap from previous day. We also have a current regular trading hours gap as well. Okay. This regular trading hours gap is inefficient to the buy side. I don't think we're going to end up going up there today, though. I think we'll be able to reach down into this. We'll see, though. If it runs up into this, we're gravitating back to equilibrium. And again, we don't want that. We also have a large wick here with displacement. So we do also have a correlation problem again. Let me straighten this out a little bit. So we're getting a drop down. We have a suspension block. Well, not a suspension block. We have a 4-hour reclaimed, but we also have an inversion in here. So we have a wick plus displacement. So that should act as a balanced price range. This whole upper area should be balanced as well. So we should start to see very shallow retracements as we look to go down here. If it's going to do, or if it's going to have the characteristics that I stated it could have, which is low resistance, and target those lows. We also have SMT justifying that. So all of this stuff is bearish. So if we come down to lower time frames, take ourselves down to the 5-minute. So we'll see if this results in an immediate rebalance into that and price starts to push away again, you know, we should be able to see this thing accelerate pretty aggressively. But again, I'm not going to consider an entry until we get closer to 645. So yeah, we're below this. So this whole run up to go lower, that's also a market maker sell model in itself. So this is accumulation in here. So that lower 25 to 50%, we should not even come up into that if we are going to be very fast. And it looks like that is what is happening. So everything that we've analyzed in terms of directional narrative has worked out perfectly. The expectation of this not really having too much of a run higher because of the BPR, and the likelihood of low resistance delivery to the sell side is also unfolded. And again, this is key. I'm telling you, I'm getting you in front of where I think price is going to go, and it's doing it. So you take that information and you apply your entry model, right? My entry model may not make sense to you, although I think it does for many of you, whether it's a breaker, whether it's a 2022 model, whether it's the Razor model I teach, or the Wick model I teach you guys in the private group, or, you know, balanced price range continuations, just simply off of a balanced price range that leaves and returns back into it, how it should respect the midpoint. Just that alone can be used in terms of the logic as an entry tactic. Let me see. But yeah, hopefully all those things make sense. First macro, plan A, continuation, plan B. Yeah, I agree. So yeah, this is running back. If we're going to be bearish, we're not going to want to see this wick get violated. So this is accumulation. This wick in here, we need to see the lower 25 to 50% of this regular trading hours gap above us stay respected. Okay, if it does that, we will continue to be extremely heavy. And it looks like that's going to be the case. I'm actually going to run to the bathroom real quick. Give me a couple of minutes, okay? Okay. We're back. Okay. So, okay, looking, didn't really miss much. So yeah, we're in that lower, let me see if I missed any questions. Okay, yeah, we're in that lower 25, lower 50% of the regular trading hours gap. We are in that first 30 minutes. So again, if this looks to break beyond this wick here, if we close above the midpoint, that would be enough for us to then start to consider that we have accumulation. This is manipulation. Maybe it looks to come back up to equilibrium. Okay, we don't want to see that if it's bearish. So this run up here, we have accumulation. Price is somewhat taking stops here. It tried to take stops in there. Well, it did, right? Let me see. What is that? Yeah, it's daily bullish order block. Yeah. Whoops. So let me actually get that out of here. So yeah, look at the closures on that 4-hour order block right there. That's so beautiful. Again, I'm really interested in seeing if this can return into this and then go lower. But again, this is why we're waiting for 645. Get us into the macro. Let that first 30 minutes unfold. Treat it as we would an Asian range for the daily range, but this is for the New York range. Right? Of course, we have our liquidity down here. This is our potential market maker model accumulation. So we should see that turn to distribution like it already is. So preferably it stays below the midpoint here. If we stay below this wick 50% and stay in that lower 25%, that's beautiful. I would like to see dollar move up to the buy side. You know, lower dollar with lower indices is not necessarily the most comfortable thing to mess around with. So we'll see what happens. Yeah, look at the dollar. Wait a minute. Yeah, I knew that looked off. Yeah, so the dollar's starting to continue to drop a little bit. That correlation is not our friend today, just this week up to this point. But I still believe and have conviction behind us looking to go lower. So that's what I'm going to stick with. So let's see, as long as this stays intact, we should be good. Should be able to keep going. We're in the macro now, so we should really accelerate if it's going to get down there. Why is that not updating? Oh. So yeah, I really like this wick here being respected. I just don't like how things look in here. It just looks pretty nasty. So we do have SMT there, but you know, we'll see. Again, the underlying narrative is bearish on the higher time frame. Right. Again, we are leaning towards that direction, but we're also inside of a consolidation as well. So yeah, I like that right there. So I think I will take that right there. That's good enough for me. Good enough for me. So let me show you guys the business, what I just did. So I did this. I engaged right there. Let me see, pull this up. Okay. So we entered right there, drop down, end up taking profit 521 right there. It's about, let me see, 521. It's about 77 and a half, 76 from the entry up there. I told you guys I like the wick being respected, and I like that lower regular trading hours gap. And if we move to the left, there's a breaker that I told you guys about. And again, this is an AMP Live account. This is not a demo account. I don't trade demo. So things that I talk about, I actually engage in. Now, whether this is going to accelerate lower or not, you know, maybe it does. But I have amounts of points that I like to take down every day. And if I can get in and take them down, great. You know, a lot of the times we're calling moves that go hundreds of handles. Do I need to live in that to make a living? Do I have to? At first, when I first started trading, I thought I had to make these big moves. You know, I was also concerned about how people thought about my trading, but 70 points in a matter of minutes, I mean, that's good enough. 30 points, like I say, is the baseline for anyone that's new. That's more than enough. If I didn't take this trade and we get displacement through this order block in here, we already have conviction with this breaker there. Okay. So price is now pushing lower. We're in distribution as well. So it should be very fast if it's going to run from here. But again, all you need is these small bite-sized moves. And because we have a framework from this larger perspective, that gives us a lot larger of a possibility to give us that large range. Okay. We have bearish power 3 on the weekly perspective so far. Accumulation, manipulation going into, well, Monday, set the high. We don't generally like that, but it seems to be in a hurry to get to the downside. Right? So now we're getting continuation. And the level that I'm looking for, like I said, is here. We do have a little bit of a crack and correlation, so it's a little bit more risky to take a trade on, right? Going with the correlation or with the crack and correlation. So like downside dollar, you're taking a short with the indices going lower as well. It's something you got to lower your risk on. Doesn't mean you can't take a trade if it makes sense, which I hope today's analysis has made sense. But you just have to know you have to lower your risk. Like if you're doing the bonds and yields analysis, things are not correlated, lower your risk. If you still have conviction behind price going in a particular direction, you know, you could still engage if your model shows up. Just lower your risk. Okay. And look for 20 to 30 points. You only need the small amount. Like look at this trade setup in here, right? Have I said anything about bullishness once in this whole conversation today? No. It's just been straight bearish. I'm looking for shorts, right? We've painted all the different components that led us to believe shorts may continue to unfold. And if it was to turn around and break this, then again, we were able to adjust and then maybe even start to seek another level. This right here, though, is okay. So this is the completed market maker model. So again, I don't expect it to come up here because again, balanced price range, this low, high, lower, low, that in itself is a BPR. So we have this block of price delivery balanced, and then price came down, supported that idea in the lower 25% by breaking through. And then what do you see here? Right? That's accumulation turned distribution. So any type of return into this down candle here, that close right there up to the midpoint should be highly sensitive if we're going to continue to be bearish. Okay. Let me see. Sean said, hopefully we go and take out London's highs. And then, yeah, I don't think it's too likely that they're going to get up there, just simply based on the fact that, again, this is a BPR and we're already starting to aggressively push away. We may see it. But even if it does that, and then it leads to a reversal, you know, I wouldn't be too concerned. I wouldn't be bullish at that moment. I would need it to really break through this range. It'd have to get beyond this high to that low's midpoint. But I don't think we're going to even get it. We have low resistance down here. We may get it, right, if dollar keeps going aggressively to the downside. But you know, I think this may lead us all the way down into this. Unless this first 30 minutes is going to act as manipulation. But before I look to get up here, I'm going to have to see these levels get taken out. So preferably this stuff stays respected. Like I said, if it breaks this low, if I didn't enter here, that would have been my next entry. And look what happened. The next candle came up. So that was another offered execution level, if you were following along. Based on an order block confirmation, we have a breaker being the main entry Wick respect, lower 25. Regular trading hours gap, lower 25. So all of that is telling us bearishness. And we got low resistance liquidity. One of the only things that goes against it is the intermarket relationship with the dollar. I think the bonds are, bonds are falling. That supports downside. Yields are rallying. That supports upside for the dollar. So there's a cracking correlation there as well between the dollar and the yields. Or it's kind of just being held a little bit. We see the currencies are not really doing much, but this is accelerating as expected, right? So we have S&T up here as well. That's another reason showing the weakness in the Nasdaq versus the other ones. Okay, if you go look around in here, S&T at the highs. Breakdown, this is a market maker sell model in the Dow. Where if we get below this, that's a balanced price range. So going up into it should act as an inverted BPR, and that should send us down to targeting some of the extra levels down here. Right here, first and foremost. But we'll see what 7 a.m. offers. But all of this in here has definitely offered a beautiful opportunity. And literally from the start of the call to where we're at now, every single thing that I've talked about has worked out. So just another call that's a testament to how in sync we are here in the markets on a regular basis. Yesterday, we had the same situation, right? It was a little bit more chaotic, a little bit more tricky. But I pointed out, I think 4 opportunities, right? I personally sat on the sideline because it was Monday after a holiday. But, what we call worked out, just like how majority of the time it is. It's not perfect. I'm going to have times when I get it wrong and miss, or just don't take a trade. But, we have more than enough times. There's more than enough evidence showing how in sync this stuff is, how good these concepts are. So, yeah. So, again, hopefully all this stuff made sense. Byron, if you're on the call, I should have held, bro. We always think that because we call these big, giant moves. Look at that. But if I was to ask you guys, if you could get 70 points, 60 to 70 points a day, would you be satisfied? I'm pretty sure, going out on a limb here, but I'm pretty sure you would be satisfied with that. So you don't want to let that mindset of, I wish I had more, really, really get to you. Yeah, Mike, exactly. You got to have a plan whenever you take a loss or go through a harder time. You want to have a process in place that can help you mitigate whatever it is that may be going on. Very, very important. And if the market's just not clear, just why engage? Why be reckless? What's the purpose? Because you're going to probably hurt yourself, and it's not going to be fun. You want to make this fun. It shouldn't be like a miserable task. Like, dude, this has to be fun, or you're not going to do it forever. And I plan to do this forever. I'll be on my way out, ready to go see Jesus with my fingers on a computer. Right? That's how I'm going to look with my click and exit. Let me get out of my trade before I leave. So, got to build those good habits. Okay with the slice. Exactly. You got to be okay with the slices that the market gives you. Can you get more? Of course. Is there opportunity that you're missing on a regular basis because you only participate in one asset? Sure. Right? Are there moves happening in all the sessions? Sure. But are you going to be mad about that? You going to be mad about those? Right? There's just no logical reason because, again, every day, I think the conviction behind this too is a testament to this community, because I come out every day, literally, in my private group, and people like Mike are in my private group. People like Maddie are in my private group. DJ, they're in my private group. They can attest to the fact that I'm not BSing you. Every single day, we're able to make something profit will happen. Does that mean we engage it? No, because sometimes there's things that I'm not comfortable with. But every single day we're able to call something that works out, right? So I think that conviction for me doing that all the time, and the conviction that that students in my private group and you guys here on YouTube are getting as well, as a result of that consistency that's proven over time, right? It'll become a part of you as well, because it's just undeniable, you know? And who doesn't want to have that type of conviction behind what it is they're doing? Because pretty much no one in the trading community, in any other communities or school of thought, has that conviction, right? It's all randomness. Remember? Nobody could time the market, supposedly. I mean, we're doing this not only on a lower time frame, but even on a higher time frame too, from either spectrum: swing trading, position trading, long-term portfolio management, to micro scalping. On the seconds chart, we're able to identify and predict, not react, predict where price is going to go. And it dances to the tune that we sing, right? So again, this area in here, beautiful entry. If I wouldn't have taken that trade, I would have taken this one. Right, once it broke through, return into it, that would have been enough. That's, again, another, what, 50 points or something like that? Damn, from entry, it went 160 points with no drawdown. Okay, I'd be lying if I'm not a little bit salty. It's okay, though. It's okay. It's okay. But if I didn't take this, I would have taken this. If I didn't take that, I'd be watching this wick, how price treats it when it comes back up into that. This here is a monthly wick. So I guess that's a monthly wick. Or wait, monthly or weekly? Yeah, it's a monthly wick. See, oh, okay, right there. So yeah, we're right at that midpoint that I was talking about at the beginning of the week. We're at that monthly wick. So if it breaks through that, again, we may look to dig even deeper and really, really pick up, come into the downside. So yeah, it looks like it's going to get real excited in here, but we'll see. I still have my convictions with this continuing. So this wick in here, it's trading into that. That's a bearish order block. We got buy side and sell side. We should not expect it to go to the midpoint. It should hold in here on a closing basis and start to really pick up. We're inside a macro. We're racing towards liquidity. We're knocking on the doorstep of this liquidity. So I don't think they're going to leave that. I think we have a reasonable chance to get down there. We do have SMT. Wait, never mind. I did take that low. Completed a market maker sell model here for the Dow. So yeah, we should pick up. I would really like to see dollar go up when it comes to this, but yeah, I may not be able to do so. So that's okay. Yeah, I'd watch that. I'm going to keep trying to see if we can hammer this lower. So you got an order block with a fair value gap. This should be a high probability fair value gap inside of a macro that gets us down into the sell side. What is that? Damn, it didn't save any of my tags that I put on the video. That's annoying. Not too sure why. I appreciate you saying that, Mike. That's the goal, right? So yeah, here's the 7 a.m. I think that we should be able to get acceleration because we're so close to that low. Dollar's now rallying, so yeah, we should get acceleration. The other indices look like they may want to keep going lower. It's a little risky in here with the S&P. It's a bullish order block, huge bullish order block. But again, all of that is inside this run up. The S&P, I'm even more skeptical. It could really just hang around. But this looks like it's clearly looking to target those lows. So I'm going to just stick to the Nasdaq going lower. It's beautiful. Let's see. So yeah, like I said, if I didn't take this entry, I would have taken it here, or this would be a high probability fair value gap, like I said. So where do you feel comfortable? And I also told you about this accumulation turn distribution. I said I have conviction behind that. And if dollar can pick up, I'm even more convicted. Right? I am highly confident that this is going to keep going lower. We're doing very, very balanced price delivery, right? Not leaving any fair value gaps available. So we're offering very nicely, very clean. I'm not going to lie, a little salty. A little salty, just a little bit. It's this higher time frame context is why this thing is very nicely delivering up to where it's delivered so far. Okay, we got the BPR up here, breakdown, treated as a BPR. Then it created another BPR in here. And it's just been off to the races. Just keeps going. So yeah, dollar going higher. That's nice. That should give this rocket fuel. We'll see what happens here. Again, this low right here, it's very significant. So yeah, one entry here at the breaker. That's where my entry was, my first one. Second entry would have been the instant this got traded back into. Third entry could have been considered in here. It's got a higher risk that's running in terms of possible retracement. But I like this wick with displacement. That's nice. We have our momentum order block here, right? Large order block, or just simply an order block itself with a wick that gets overtaken, at least up to the midpoint of that, or the whole body. Whenever it returns back, that should be a balanced price range. Buy side, sell side with displacement. If you think of power 3, accumulation, manipulation, distribution, that's part of the rebalance of this small piece, this small fractal in there. And so you should get redelivery. That's the logic behind the momentum order block. We're thinking power 3. So when it returns into that order block, it's beautiful. That's all you basically see here. That's all that's happening. We have accumulation, manipulation, distribution, rebalance. So this was part of the rebalance inside that accumulation, manipulation, distribution. So yeah, now we got real conviction pushing lower. It's looking pretty nice. Got a wick right here. As long as it stays below the midpoint, we should be good. This is a monthly wick midpoint. So we'll see how that is treated. Looks like it's being used as resistance. Whoops. Nice. So I ended up taking that one as well. Right up in here. We returned into there. Took down another 50 points. It's crazy that that's 50 points. It's nuts. That's 50 points. A little run right there just simply got below that low. Now, because there's a little bit of a correlation discrepancy, I like my scalper mentality. Of course, I could have held this up here and got more, but hey. 21. About what? So 70. Whoops. 80, 90. About 120 points so far from 2 setups. Of course, that one trade setup here could have got it all, but that's how the cookie crumbles sometimes. This is a good opportunity for me to teach you how to get back into trades and not be so concerned. Because again, order block, wick, monthly wick midpoint, fair value gap with a bearish order block, comes back up into that, breaks down. If you miss it and you want more conviction or more confirmation and you're banking on your level being targeted, you just simply look for price to come back in, trust the order block. Again, this goes back to what I said earlier. Every concept, excuse me, every concept has a level of conviction and trust you have to build with it. It's a relationship. If you don't ever study order blocks, you're not going to be able to trust them in the different circumstances and conditions they arise at. If you don't study fair value gaps intensely and get thousands of examples, you're not going to be able to understand them. Breakers, you're not going to understand them. And for every concept, so on and so forth, it's the same thing. So in order for you to get to a level where you're able to go in and reliably engage something like this, right, which let me show you the business real quick, just so you guys know that I'm not playing games. I don't play games, okay? I don't play games. Okay? Whoops. Oh my God, what happened? Okay. So again, upper high right there. This price went down, tag that, boom, that was the first opportunity. If you miss that, you could literally catch it when it comes back into it. That's a bearish order block. This low, high, down to the low again, that should be a balanced price range. If you're trusting that's going to keep going. So anytime that it comes back with a wick, we have a wick in here, you're looking at the closure of the bodies of the candles. They're telling you a story. So if it continues to close below that and you have a logical target, there's no reason for you to be concerned. You can miss the setup and then just get back in when it offers it again. Because order flow is still showing as bearishness. Plus we have higher time frame context, the market maker sell model, accumulation turn distribution. That should act as an inverted balanced price range. We have our main target down here we've had since the start of the session as a possible chance to be targeted. We talked about the low resistance capacity. There's nothing that could have went any better in this analysis today. Today is like picture perfect. I mean, there's what more can be said aside from I should have held this and not required 2 trade setups. But regardless, I ended up getting well beyond my goal. This first one hit my goal. Stop looks crazy. Okay. First one hit my goal. Second one added, pretty sizable amount. This could be another moment where I think, I should have held the trade. That's fine. I don't care. I don't get concerned about me catching hundreds of handles. I know that I am consistent. All I need is the consistent process. Okay. Maybe one day I'll look to hold hundreds or 200. I've been doing better this year. Normally I was just 20 to 30, 20 to 30, 20 to 30, 30 to 40. This year I've been averaging well above 50 to 100 points per trade setup that I engage. Almost every setup I give runs beyond 50 points because of the framework I'm teaching you and putting you in front of, anchored from that higher time frame. Okay. So yeah, we don't play games over here. Okay. Amp Live. You see the Amp Live logo up here too. So again, hopefully this stuff is inspiring to you, but I hope that everything makes sense. Okay. I hope it makes sense as far as why we are having the analysis that we did, right? Did I talk about buys even once today? No. What was our objective? Bearish. Did I paint the picture clear enough as far as why? You know, it's up to you guys. If you let me know in the chat, if you're able to follow along, if everything made sense, you know, I'd really appreciate that. And if something doesn't make sense, you know, let me know. Mark, appreciate you, brother. Not the Mark from the private group. Is it? Wait, is that? I don't know. Is it? I don't know. Maybe. Maybe? No. Mark's thing is Bullfrog. Also providing narrative. Yeah. Yeah. I'm glad you guys see that. I hope that all of you guys have the perspective that Mark has right there. Because that's my goal. My goal is not to get out here and showboat and claim I'm the best and all this crap. I could care less about that. Okay, I'm not going to lie. This was gorgeous. Definitely a little, like that much salty that, you know, over 100 points was not held. Look at that. The move that I called initially, that just ran over 300 points, right? Talking about that being a market maker sell model. Look at how beautiful that is. Buy side to sell side. This is a good example of the original consolidation not always being an actual consolidation. Sometimes it's a low inside of a larger retracement in a bigger trend. Okay. Damn, look at DJ. Bang that for another 100 points past another eval. Look at that. I don't give signals, but if you got 2 brain cells to, you know, go like this with, I'm not a financial advisor, but hey, you'll do what you will. But I hope you guys got value. Hopefully your demo accounts, have done well. But I hope that so you don't give signals, but the analysis is always about. Yeah, exactly. So again, 2 brain cells, just got to go, you know, just like this real quick. And the possibilities are whatever you make them. But again, I'm not a financial advisor, same financial advice. But I hope you guys are getting value. If you like the call today, if you guys think I do a good job of doing what we do here and I communicate it in a way that makes you guys understand it, slowly but surely for some, fast and furious for others, definitely don't forget to like the video, subscribe to the channel. If you have any friends that you think can add value to the community, you know, maybe they're good, maybe they have a good mindset, maybe they're positive vibes, maybe, you know, you think they would enjoy this type of content, or if you think they'd be a good fit to be in this community, because we all help each other out, right? We're all positive, pick each other up when we're down. If you guys know anyone like that, if you know anyone that's trading and maybe struggling, that just needs someone that comes out here consistently and does what you've seen today, you know, students in my private group can attest to this, that we do it every day. But if you think that that experience would help somebody that you know who's maybe struggling and just needs that extra clarity, definitely pass it along, pass the message along. I'm trying to share my blessing with anyone willing to listen, because I have been absolutely blessed to learn this stuff. It's really hard. Okay, this stuff is not easy. But I hope that the way that I view things, the way that it's organized, the repetitive nature, the effective nature of what it is that we do, I hope that I can give you guys just that little extra clarity that can help this be a lot more attainable for you, so you don't have to sit there and be so down on yourself if you have been struggling recently, because there's really no need for it. There are solutions to every single thing that you have a question about. And, it's not rocket science. I'm definitely not a mental genius. I dropped out of high school. Not because I couldn't pass it, but circumstances in my life didn't allow me to show up. Didn't have a ride, didn't have any money, was homeless. So from that up to where I'm at now is an incredible shift, both mindset wise and with what I'm able to do. But you know, we all have our battles and struggles. So again, if I can just play that small role in giving you guys a little bit more clarity, help you get a little more organized, help remind you about the realities, and get you to start thinking and doing things in the proper way that helps you thrive and grow. Um, you know, definitely share the blessing, right? Because I want to share this with anyone who's willing to listen. Because I know that once they listen, once they stick around for a while, it's undeniable that it's unlimited in terms of what you can accomplish with this. And again, I try to keep it simple. If you ever come across something like liquidity trading was talking about earlier, uh, where he is trying to simplify his approach. If you guys have any questions about stuff like that, I think I personally, over the last couple of years, have done a great job of helping traders simplify. I have a layered approach. I'm pretty advanced when it comes to what it is I'm looking at, but there's just a bunch of little components. Some components I don't use all the time, but when the time is right, I pull them out. It's like a weapon that's only used for very particular things. I help you guys classify what those are as well. So it's very versatile in terms of what it is that I'm able to do with students. I've taught over 200 plus students. So that experience has made me better. So I think that, because of you guys that have allowed me to have the opportunity to help you, I have been able to communicate what it is that we do in a better way. And I'm always learning, right? I'm going to just keep trying to get better. But I think that there's a lot of value here. So, definitely if you guys have anyone struggling, anyone that you think can get value from this, maybe even just the motivation to keep going, definitely let them know about what it is we do here. I like the word of mouth. If everybody's kind of familiar with each other, I like that feeling, how the community feels in that regard. It's better than me running an ad and getting a bunch of random signal junkies who are hella annoying, because they won't survive here, unless I put them in a trade. And it's like, I'm not going to be there all the time, so how are you going to provide for yourself if you're only waiting for me to say something? You want to be independent. That's what this industry breeds, is independence. Because if you're codependent, you're going to be eaten up like by someone like me and all of you, right? Because this is war at the end of the day. We're in a financial battlefield and you got to come prepared. And part of that is having good information, and being around a community like this. So yeah, Emmanuel said, I appreciate you, brother. I'm glad things are getting a little more clear. You just started with me too, so man, imagine what 6 months is going to do to you. Because it's like this all the time. You're in my private group too, so you just joined. So it's going to be intense. Yeah, I agree, DJ. Signals are absolutely not worth it. That's a waste of money. Why? Unless, of course, you want to trade, but deep down in your heart that you can't do it. If you can't do it, there are good people that are willing to do that for you, but you have to vet them, because there are good signal providers that are kind of like portfolio managers in a sense. But again, it's depends on what your goals are. I don't encourage it, especially if you have the time. But if you have the time but no patience, that's a personal issue you got to fix, because that's bad for your life as a whole. If you're not disciplined, that's bad for your life as a whole. You have to fix you in that instance before you do anything here. But, if you're not interested in that, again, there's people out there that are reasonable. You may see some profit short term, but what happens when the signal goes off? Yeah, when it goes offline, you're done. You're screwed. So you're not going to get no money. Your spigot of potential profits turns off. So again, there are those resources. I know of a few. They're my friends. We know what we're talking about. But I don't want to do that because I know what it puts inside people, and I want people that want to learn, so that I can share my blessing that I've gotten in detail. Because if you guys haven't noticed, like I could talk about this stuff probably for days at a time. Like if I didn't have to sleep for health reasons, okay, I'd probably be able to sit here on the computer talking about trading 24 hours straight every single day. I just love it that much. This is my life, right? This is something I'm deeply passionate about. So I want to work with people that, maybe they're not that obsessed, but they're still obsessed with trying to make themselves have a better life. And they think that this is a way that they can do it. Anyone that has that mindset, that's willing to put in the work, willing to be wrong, willing to change whatever it is they have to change, both personally and when it comes to their trading. Anyone that's, teachable, coachable, willing to take good advice, who sincerely believes in their heart that they could do this. Those are the people that I like to work with. Because I know that, when I tell them things that has helped me, they're going to do it. And then seeing traders go from, I don't know what's going on, I'm at my wit's end, I'm at the bottom of the barrel right now, please pick me up. People going from that to, man, I could see things clearly now. Maybe not profitable yet, but I can see light finally at the end of the tunnel. I could see how eventually I could do this on my own. Seeing that just does something to me. Because I remember when, I never thought that I was going to quit. But I remember dark moments, especially with life, all the things that were going on, along with me just blowing accounts desperately, trying to make this work, especially when I got fired during COVID. I mean, I was desperate. I was really desperate. And of course, unfortunately, that didn't lead to positive results, but it did lead me to rock bottom. And from rock bottom, I was like, all right, well, clearly me looking to take trades is not going to be successful because I don't know what the hell I'm doing. I'm trying to go too fast. And then ICT came into the picture. And that's when everything changed. Like my whole mindset changed. Everything about what I do, the way I view the market, the way I view myself. He has some radical opinions about this stuff. And it forces you to look internally. So, shout out to him. So I just want to be able to play my part in passing that blessing along. So that's my objective. Before I got laid off with COVID, I was doing construction. I was doing HVAC work, trying to have my own business doing that. But I started growing away from it. I didn't like the culture. Like I don't drink, right? And people were just drinking every single day on the job. I don't know. I just didn't like it. It wasn't something I wanted to hang around with a lot. Plus I had my kid, and I was just like, there's a lot of favoritism. Like I went to school to do this, right? I had all this education and whatnot. And it seems that, I knew more about pretty much everything versus the people that worked there for years at both the jobs that I worked at. And they just wouldn't give me what I knew I was worth. I'd finish jobs in, much faster time, much better, sparkling reviews every single time. Yet every time I asked for a raise, they look at me with like disgust, like, what? You shouldn't even feel the need to ask that. Like you're only worth this much. And I was so mad for so long. I did that for 5 years. But learned about the industry and everything I had to learn for like 8 years since I was really young in high school. But, ended up leaving that by force. And then my friend Daniel, who lives in Egypt now, he's the one, he put me on to what trading is. And it was through a multi-level marketing. So IM Academy or whatever the hell it was called. And I went there to trade, and I noticed that was a piece of shit too. I'm like, dude, I don't want to shove this down people's throat. Like, I think that's why I'm also not necessarily a person that wants to shove all this same stuff down people's throat the way that IM Academy did. Like, they would be shoving all this lifestyle down people's throat. And then every single other mentor, quote unquote, is doing that. And it just, I didn't start this to have that perspective. So I think that's why I lead the way that I do with the content and stuff that I teach. Yeah, it was a poison that I ended up turning into something nice. That's how I learned about smart money concepts. That's how I was introduced to trading. So in that sense, it's not all bad. But, the way that they were trying to get things done, they didn't really know how to trade. They were lying, doing what everybody does. Fake it till you trick people to get you to make it, right? Just siphon their money away, sell them goals and dreams and aspirations to do this or do that. While on the back end, that's not really the goal. The goal is to market to you, make you one of their marketers. So you get your whole, community or people that to try trading, but then come and then be a marketer. That's their main objective. And they would make so much money off of it. And people that went to do trading went there and realized, like, crap, this is not what they're about. So what the hell did I join this for? I don't want to market. And they make you feel bad for not doing it. Like, well, you don't want to, share this with people while you're not making any money in trading, which is the reason you went there. They'll be saying, oh, you don't want to pass it on to someone. You don't want to make them successful too. I'm like, bro, I'm not even successful yet. What are you talking about? Like, oh, well, maybe this isn't for you. What, selling your crap that's not helping me be profitable to other people to make it so they're not profitable? That's not for me. I guess you're right. And then my friend Byron, who's been with me since the start, he's big player in the private group that we have. He showed me ICT, and I'm like, who's ICT? What's an ICT? Like, what? Iced tea? What? And I saw it. I'm like, dude, this is great. Like, this sounds like it makes sense. I'm confused as hell, but this stuff makes sense because I was already dabbling with smart money concepts. Little did I know it came from ICT, and they were just ripping it off, rebranding it. And then once I started messing with ICT and learned about his mentorship and all that, I just got hooked. And that was the greatest decision I probably ever could have made in my life, ever. And then I paid 2 other mentors who were deep in ICT's concepts since baby pips, essentially, since 2010, 2011. And man, the wealth of knowledge that I got from them was, to this day, is just pretty incredible. It's made me who I am today as a trader. I didn't have to go through them, but again, I'm a person that I need really hands-on stuff. So if I can't have someone doing what I'm doing, it's going to be hard for me to learn. I might not even be able to learn because I had lots of doubts, lots of baggage from my past that I had to overcome before I could be profitable. And, they helped me. I also paid a trading psychology coach, who I'll shout out right here's page or channel or company is called Trading Composure on Instagram. Spectacular individual, by the way. He's someone that I met through one of my mentors that I paid to help me one-on-one, which was $6,000. The other one I worked with was $5,000, let alone ICT. So, I mean, you can imagine, on top of losing all my money, right, when I was first starting out, failing with a bunch of idiots that were sucking my money away. So it's been a rough road. We all go through these things, but ICT's stuff is just unrivaled. It really is. Doing stuff like this, I wouldn't be able to do this if the market didn't operate the exact way that I talk about, like he talks about. So shout out to him, whether people like him or not. In many ways, he's a hard person to learn from. He's made it hard on purpose to weed out lazy people. But once you get the gist of it, it becomes really easy. Like we hopped on the chart. I think in less than 20 minutes, I decided that we're probably going to go lower. Right? And over time, it's like that. It takes longer for me to explain all the different things and whatnot, like on Sundays. It takes longer for me to explain it and make sure I'm not missing things so you understand, versus when you go ahead and start doing it on your own. You'll be able to hop on the chart, any chart, stocks, anything, it doesn't matter, crypto, and immediately decide, okay, well, this is probably more likely than going the other way, right? And this is why. And that has only been afforded, in my opinion, from ICT. The who, what, when, where, why. I mean, most stuff doesn't answer those questions because remember, most of these people that are teaching other concepts think the market's random when it's not. I wouldn't be able to do this if it was random. I wouldn't do this if I truly believed it was random. Because I'm going to just put my faith in something that's 50-50, a coin flip? Like, that's pretty risky. Some people do it because they're good at managing risk. It's not because their concepts are really any good. It's just they're managing risk. You could flip a quarter and, if it's heads, you buy, tails, you sell. And as long as you manage risk properly, you could end up being profitable. Not wildly profitable. You have to hold your runners, right? Cut your losers quick. But you could be profitable with anything. But I don't like that. I don't want to feel 50-50. I want at least 60 to 80%, which I prove is the case. Okay. Not only by me doing this, but now doing it for years publicly at this point, and privately for even longer. And it just does the same stuff. It's like a book I've read 1,000,000 times. And I hope that it's becoming that way for you too. Okay. I hope that, you feel that you're working towards that the longer you spend time here, the deeper you get into ICT's concepts. I appreciate you, Liquidity Trading, for sharing the live stream. Appreciate you. But yeah, so I guess that's enough of my life story, or just experience. Hopefully it's helpful though, some of the perspective. Let me see, did I miss any questions, you guys? Oh, what the heck, it wasn't loading. Next you trade, so I don't know if you actually sold NQ. I don't know if you actually, yeah, I sold NQ. I just showed the 2 trade setups earlier. Yeah, I showed the executions earlier. In a gold trade, let's pull up gold. Why not? You guys remember early in the year, Mike, if you're here, or any of you guys that have been with me for a while, remember early in the year I was calling gold, or banging gold exactly the same? Doesn't matter what asset, it's all the same. Yeah, it looks like the target I laid out a couple weeks ago, it's working towards that level still. Little gap right there. You're in, are you buying or selling gold? Yeah, we called this area up here going short. If you guys remember, those of you who have been with me for a while should remember. So if we take the volume imbalance there, we are coming off of this low and we're closing above. So this here is a rejection block. So if we can't break this, you know, we may start to look for a recovery. I think that we could reasonably see price to get down into this still. It's still an inefficiency. It's very small though, because we have this wick. So that's balanced, buy side and sell side. So we only got that little itty bitty piece down here. If we're referring to this fair value gap that I looked at on the higher time frame, I think that you still could see price maybe getting down into that level. We look at gold and silver together. So yeah, we do got bullish SMT there. That would be somewhat of a concern. See the SMT there? You guys remember the little tactic I told you about when it comes to a gap? Wherever the wick is, in conjunction with that displacement, that is balanced in from this level down to the low of the fair value gap. Okay. So all it needs to do is come down. Look where it hit. Perfect to the midpoint of that little range. Perfect. So yeah, this does look like we'll have to observe the SMT there. If this breaks above this volume imbalance, could end up being a problem. Something that supports this potentially continuing to go lower would be the wick. I would have preferred that it stayed below that. It's getting a little deeper than I would like, but we do have this volume imbalance. So unless this high is violated, you know, our 3 PD arrays are in alignment, right? We got the wick, volume imbalance, swing high up here. So until it gets up there or just simply gets through this, comes back down, taps it and runs away, you know, we still may look, like I said, to get down into this little itty bitty piece of the gap down here I talked about. Oh yeah, we do got that SMT at the low, so I would be, you know, I would be a bit cautious about that. Yeah, my line in the sand would be here. Again, we have this low, high. We're now below that low. I don't like how it's closing above that though, but still we're below it. Hasn't displaced, so you know, it may not be too aggressive to get down, but as long as this high stays intact, it still has a chance to go lower. But this low, high, lower low, if it's going to stay bearish, another factor you could take into account is the 50%, but preferably the lower 25%. We're right there at that 8%, the 8th levels, or not 8%, 8th point. So the middle portion of the 25% of the lower part of the range. So 25% of that lower 25% of this larger range is right there. So you take the lower 25, split it in half. It's basically tapping it perfectly, right? We're right there at that level. Okay. You also have this wick here. Put the quadrants of that, we're in that lower 25%. So as long as we stay down here and we don't get no exaggerated displacement through it, we could really just be accumulating. Do we have equal lows here? No, so we did purge out this higher time frame weekly low. So as a result of this higher time frame equal low being swept, it's now triggering in a move higher. It's been bearish, going lower. So lows are external. So taking out a low, once it hits external, you look for internal before you look to keep going lower. SMT has never been high on my priority. It's definitely very useful. It's definitely useful when you run into a liquidity pool or into a PD array. It's a relative strength indicator. It's not an ICT concept, I don't think. It's just divergence. But divergence mixed with ICT concepts, right? The context it makes it highly effective. Like if this turns around, right, that'll be a testament to that. But again, it's not a be all end all, but it is a great timing tool as well. It's a validation or verification tool for a particular level to hold. Like if we think this low is just going to be a sweep, we want to see SMT and then a change in state of delivery. That SMT and change in state of delivery is a high conviction signal for price to give you that turnaround. It basically classifies this low as a protected low. But, you know, it's not a be all end all. But it's definitely worth deeper investigation if you haven't investigated it, brother. And if not, you know, like you said, you know, keep things simplified. If it's working, don't break it, right? Just add whatever fits with what you're already doing. He said, I used to work in digital advertising as an animator. Oh, wow. Yeah, the digital animators in the whole media space, AI is coming for them. AI is coming for every job. It may not replace all of every job right away, but every job, even construction, I've discovered, may be done by robots. Can you imagine if they can get that to work? They can get robots to build homes. They don't ever have to take a day off. They don't have to take breaks. The productivity could be through the roof. The price of the homes will come crashing down because of the labor not being needed. You think that these big players are not looking to do that? It'll increase their profit margin as well because they don't have to pay them. Everything's at risk. It's going to take longer, obviously, for that to be affected versus like animators and whatnot. But you know, the future looks crazy, you guys. Future looks nuts. Like I've already built an indicator that spits out signals relative to one of my models, and I can literally just make the shift and go automate it, and it'll just be firing off signals that it executes. Obviously can't use that in many of the prop firms. I think funded next I'll be able to use it. But think about it. You know, even trading is getting automated. It's already kind of had that opportunity, but you know, that's a possibility. You get really good at this, you build your system, try to go find a way to build an AI, a brain in an AI that can understand everything you think. You can have that running in the background. The way I'm going to leverage what I have is I'm going to use it as a swing trading idea. It's the thing I have already hits at high 70-80% when it comes to swing trading. It fluctuates from 60 to 80% depending on conditions when it goes to the lower time frame, but it's still reasonable. It's a very, very reasonable amount. Plus the risk to reward, I mean, it's pretty incredible because of what we look at, because it uses all the higher time frame framework. It uses one entry pattern that I like with the context. And it's highly effective. So, you know, maybe one day you're going to be able to do that as well. But AI is something crazy, you guys. So if you haven't had a reason to never quit, that's your reason. We're walking into a world that we have no clue what the future looks like. And it's already having an impact. So, but yeah. Let me pull this up real quick. Yeah, we got the bull flag lovers. Got these relative equal lows down here. This is a higher time frame level I really like. We're above the open price. If this is going to go short, that would be a perfect position for them to take this down, create a market maker sell model. If you wanted to wait for a little bit more conviction, you could wait for this to close an inversion below that, catch the second stage distribution towards this failure swing. We got SMT here. So that's bearish as well. Supportive idea. Yeah, I don't think I really have much against this going short, especially if dollar keeps going higher. The indices keep going higher. Currencies, well, no, dollar going higher, indices going lower, currencies going lower. If the bonds keep going lower and the yields keep going higher, you know, we should end up seeing gold and silver continue to fall. But yeah, all of this run higher here inside that retracement that we outlined with the volume imbalance. Once you got above this high, that became a balanced price range. And then once it traded back down into that, right, this is accumulation, manipulation, distribution. Once it breaks that high, and then rebalance, redelivery. That redelivery is in a market maker buy model off of a drop that bottomed out to then retrace because it took external range liquidity on that higher time frame. So once it got above here, it's all buys until you get to your next PD array on that higher time frame, which then can be used to potentially turn around and create a market maker sell model like I talked about. So we have one right here that could end up becoming a sell model if it inverts that. And then that could be the first stage distribution, right? Take this, once it gets below it, the lowest body, we shouldn't go beyond that. Or you could use the whole range and use a 50 to 25%. Prefer that it stays in that lower 25%. And if it could close below that and displace, great. Another inversion in here. Once it breaks down below this, that'll be second stage distribution. We should have a very shallow retracement, if any at all, to then get us down below here. Right? Yeah, we got accumulation here, manipulation, distribution, small rebalance, redelivery. Now we're getting one more attempt. Stop these equal highs out. So again, if these equal highs, this framework from this volume imbalance can break down and invert this fair value gap right there, you could be highly confident that this will be the target. And then if we take this out, that's, in my opinion, going to qualify this if we can get down below 50%. Once it gets down there with all this stuff on the back end, higher time frame level, market maker sell model, smart money reversal, breakdown of these levels, which would create a balanced price range up here. Respect to this as an inverted BPR or accumulation turn distribution. Once we get down below 50% with all that behind us and the dollar's going higher and the indices are going lower and the currencies are going lower and we have SMT at the highs, I mean, you have a barn burner of a narrative to get us down below these lows. And that's pretty far away. So you could have narrative for a couple of days. Unless, of course, it, fails and then breaks up above here, because then, something else may turn around. If we get above this high, this becomes a buy model. This volume imbalance, if it gets inverted, would then lead us to think that these highs up here would get targeted, which they're relatively equal. So when it comes to the balanced price range idea, I want to point this out as well. Buy side, sell side. Price returns back into it. It's treating it as a balanced price range. This couldn't even get up to that low. But then it returns back into it. What happens? Aggressive break, creating a market maker sell model. Okay. So accumulation, manipulation into the low of the BPR. We're below that lower 25%, right? Breakdown, so that's distribution, rebalance to the breaker, right back to this balanced price range, consolidation, manipulation, distribution. Respected the midpoint, lower 25% of that balanced price range. Then you get distribution again. Inside here, right, that's part of the distribution on this, right? So distribution, rebalance, redistribution. That redistribution doesn't have a low, high that could then break this low. That's similar to this, right? Low, high, breaking down through the low, market maker sell model. This low to that high, original consolidation, smart money reversal at a PD array in a premium too, from that high to that low. Breakdown, so distribution. So original consolidation. If you go to the lower time frame, you'll see accumulation, smart money reversal at a logical PD array level that we expect a response from. We have back end higher time frame context supported by this BPR. So once it breaks down, you're thinking market maker sell model, unless this was to be violated. And if this, if I could find the stupid tool, what the hell is it at? Oh, if this was to break down like this and refused to break that and then took out this high here, you would immediately look for this high. This is high resistance. If we get this failure swing that breaks this high here, that's a failure swing. So this would end up becoming low resistance. And that would be what I call a type 2 dealing range. Type 2 dealing range, once that failure swing's high is broken, the next target is the origin that created or was a part of that price leg. That is what I call a type 2 dealing range, reversal. That's how you can confirm whether a low is going to reverse or not, by looking for these signatures. And I'm telling you, if you go study what I just told you, which I've taught before, almost everything I talk about, if you go in and study it, I mean, you're going to be shocked. It's not, and that's why we're able to do these things all the time, because they show up every day. Every day there's a type 2 dealing range. Every day there's a breaker, order block for value gap, market maker model, power 3, every single day. It just matters if you know how to use it and have that relationship, which I try to help you build by doing these calls. Okay. So yeah, I see this as accumulation in here. This is a bull flag. So you can imagine retail thinks bullishness. I will be bullish and look for this high if this down movement proves that it doesn't want to break through the midpoint from this high to that low. Once we break this high, that's a balanced price range, bullish. It's refusing to go lower. So then I would look to see this high get taken. This would be my change in state of delivery again. We have one here. And if we get displacement through this one, you zoom in, that's also a rejection block. So if that rejection block gets traded into and doesn't wick lower, or doesn't leave a wick and then displace aggressively away from it, once it breaks through it and gets above that high, coming down into that, we have a wick and an inverted rejection block. So it should now act as support. And then we would see this also as a type 2 dealing range. Low, high, failure swing, break above the high. So that high then becomes a target. Market maker buy model. So you see how all this stuff is like in the chart all the time, no matter what time frame or what asset or when you look at price. These foundational frameworks help revolutionize the way that you see the story that's being taught, aside from the story that each candle provides. But this is why we do what we do the way we do it, and how we're able to get on here and be so consistent with where we think price is going to go, and how we can develop conviction behind what it is that we talk about. And when it's not there, when I don't see it clearly, we know that it's probably not best to take a trade, because this stuff is very common. And if we're not able to pull it out, hands off, because it will show up again. Maybe not today, maybe not tomorrow, assuming that we're in a bad condition. But in all honesty, we've traded through bad conditions, or at least called the market, and still are able to find stuff that's worthwhile. Like Monday, yesterday, right? It was a bit of a shit show, but again, called multiple setups, and they all worked out. I just didn't participate because I didn't like it. I think 2 students did engage, if I'm not mistaken. I could be wrong. But, recent high, the 1 hour, was my definition of a low resistance. I do see cases for both directions. Yeah, you want to have conviction behind one direction. Again, that comes through conviction and experience. Um, H1 lows. So yeah, if that H1 low is part of a stop run, you're going to see that it's harder to get through it. If it's a failure swing, that's low resistance. The easiest way to identify, even with what you just said, whether something is truly high resistance or low resistance, if it has a stop run, we know that they've already triggered stops. So the likelihood of them going down there, even if they go down there, it's going to have a harder time and it's less likely versus them engineering liquidity by leaving a failure swing. That's unfinished business. That's fresh open liquidity that's ready to be targeted and have order pairing take place. In this case, if they ran up above these highs and you have a failure swing, they're engineering buy side interest by inducing them, by doing this, by running into that liquidity, pulling in those orders to then go down and take profit at a level where there's unfinished business, which again is a failure swing. I mean, you could just understand that logic very simply too, just by looking at it, right? If they run down below a low, liquidity's been engaged. So wouldn't it be better if there's no liquidity engaged for them to run down there? You see the difference, like with me saying the theory, it's one thing. You see the difference in price behavior. When it's a failure swing, how does price smash through those lows? Is it very slow and lethargic? And the same thing is true when there's a stop run that price tries to get into. Is it more often flying through those levels, or is it seeming a little bit slower, more choppy, more deep retracement, more less aggressive to get down through those levels? That study in itself is a study you could spend hours, years even studying and pulling out data from. I think that if you go ahead and do that, all of you guys will get value from that. Because again, that's as simple as you can keep it when it comes to high resistance or low resistance. Does it have a stop run or not that's associated with the low or high that you're looking at being targeted? And that study is what's going to prove it. I could say anything, right? But if you go in with the intention of observing the characteristic of what I just described, you will very quickly, I'd say within a couple of hours, if you spend a heavy amount of time studying this, use one time frame. Don't flip around, go to 500 time frame. Use one at a time to observe the theory, right? Because every time frame has its own story, its own liquidity. But yeah, getting that almost subconscious understanding. Yeah, no, exactly, bro, exactly. Unfortunately, no trade for me today. Didn't get the reverse FEG. You either have rules or you don't. Exactly, Sean. Exactly. 100%, brother. You're the profit or not. Yeah, 100%, bro. 100%. I should honestly tattoo that and just show it around so it really drives the point home. Because that right there is something that was burned into my mind by one of my mentors. And ICT too, right? So it's like all the good traders for some reason have things that, connect, that align properly, like not over trading and over leveraging. And you either have rules or you don't. Tony. And I hope I'm making multiple monsters, right? Or at least helping you guys turn yourselves into a monster, because you don't want to give me all the credit. You want to take the credit. You're taking on the risk, right? You guys are the ones putting on the risk, doing the work, or you're not. You know what I mean? And the results are going to reflect. So I just play a small role in trying to get you to see things from a different lens, and then identify certain stuff that may become important, or some stuff may not be important. It's your choice to decide what is going to work for you and what doesn't. Oh damn! You took it on the S&P, huh? Nice. Let's go flip to that real quick. Oh wait. Oh, you took a trade on gold. Oh, okay. Yeah, I'd be forgetting you be heavy on gold too. So you said took a short at 41.39. 41 to 41.39. Why is it? I'm assuming you're on probably CFDs, but I don't think that'd be. I don't think it'd be different. What is it? Oh, wait. Yeah, I can't even tell. Oh, damn, it is a little different, huh? It's interesting. 41. Oh, long. Okay. Yeah, I'm tripping. Why the hell am I tripping? So you said 41.39. Look at that. Beautiful. Hey. Hey. It's pretty awesome to me, bro. 75, you said? Damn, so you rode that baby all the way up to that. That's incredible. That's a beautiful banger right there. Sheesh. Good job, Tony. Hey, you're a student that's been making so much progress. When was the first time you watched me on YouTube? I think it was like a year ago, right? When you first discovered me. I still have 40.25 still held on my Forex account. Oh, interesting. Damn, yeah, that's nuts. That's a big run right there. It's beautiful. Look at that. Rocket ship. Good job, Tony. I can't remember how long you've been with me, Tony. You've definitely been one of those students that takes initiative, and you see the result. Again, you don't have to use everything, but whatever aligns with what it is that you're doing, or whatever you feel can improve on whatever it is that you're doing, I encourage you guys to take it. Take it, employ it, practice it, backtest it, obsess over it, and I'm very, very confident in the fact that we teach, and its likelihood of really skyrocketing, at a minimum, your clarity in the marketplace and the way that you navigate, let alone, giving you the ability to walk on your own and reach heights that you can't even imagine right now. Remember, you may have a goal. Oh, I just want to quit my job. Oh, I want to just make just enough so I don't have to work. You may have those types of goals, but we're in an unlimited industry. And as long as you respect risk, it's amazing. Yo, what's up, Jen? Jen, don't say you're guilty. Hey, we need to sleep. Sleep is okay. Sleep is okay. Don't beat yourself up. Sleep is a good thing. You need sleep. Dang it, especially since we're in California. We got to get up so damn early. It's nuts. Yeah, 1 year. Yeah, I'm happy to hear that, Tony. I hope to hear that from all of you. All of you guys that do lend me your ear, spend time here. That's my goal. To get you guys clarity and to hear your stories. You guys are all different. It's an amazing thing. It really is. The whole community on the yeah, I agree, DJ. I agree. I appreciate you saying that. I try to be humble. There's enough of the egotistical maniacs out here. Doesn't help anybody. And I could care less what people think of me, really. I really don't care. Whether they think I'm the greatest or the worst, doesn't bother me. But what matters to me is you guys succeeding. That's all that matters. Yeah, Jen, you got little kiddos. You gotta be well rested. They demand it. Your trading demands it. Your focus, right? All that stuff demands it. So you got to prioritize it. But yeah. See, I think I've kept you guys here long enough. Hopefully, you guys learned some stuff today. If you didn't engage, I think today was a great day. Picture perfect. Yesterday was pretty good with my private group as well. So, Hopefully, you guys in my private group were able to learn a lot from that too. The video's up in the archives. Um, but yeah, hopefully, you guys took a lot away from today. I will be doing our YouTube marathon where I go live pretty much every day next week. This month has been a little weird. Like we started July midway through last week, so I'm not classifying that as the first week. So every second week of the month for the next 2 months, we've already been doing it, for 1 month. Um, but at the second week of every month, I'm going to go Sunday, Tuesday, Wednesday, Thursday, instead of just Sunday and Tuesday, which is our normal schedule, just to give you guys a deeper look at the fact that, yes, I'm telling the truth. If you don't believe me or the students that testified to us being able to do this at the level that we claim, I'm giving you guys a look behind the curtain. Get to see the fact that we do absolutely hop on, and we do this every time we hop on, right? It's that consistent, it's that precise, and it's not something that happens every so often. It happens every day. And the moments where it doesn't, or the moments that I don't like the condition, I let you know. And that's a reality of trading. You know what I mean? And anyone that says different, you should run away from them because they're dumbasses that probably aren't showing you the whole story behind what it is they're doing. And they're scared. Most of them are scared. They can't come out and put themselves on the line because their egos are too big. I have no problem getting things wrong because I know most of the time we get it right. And it's just a fact. So again, every second week of the month, we're going to do this little marathon where I'm live 4 days instead of 2 days. Get you guys a look behind the curtain. So that'll be for this month. It'll be next week. And then, of course, we'll be back to normal schedule. And then next month we'll do it. And then the next month after that as well. And then I'll decide, if I'm going to slow it down. Maybe not. Who knows? Stick around and find out. Right? But yeah, with that being said, again, thank you guys for all the support. Again, don't forget to like the video if you guys enjoy the content, if you enjoy the community and what we do here. But yeah, that being said, God bless y'all. Again, I appreciate every single one of you. If you didn't take a trade today, that's fine. Don't worry about it. I'll see you guys here on YouTube on Sunday for our weekly prep call. But yeah, other than that, enjoy the rest of your day. Let me know if you guys have any questions. If you aren't following me on Instagram, definitely do that because we can communicate. Or you could join the free group if you want to join my private group as well, or look at the details. We got the QR code and links in the description. That's also where you find the free Discord link as well. But again, if you're not interested in those, you could just follow me on Instagram. We could have conversations there, and I could see you, a couple of times a week here on YouTube. And I think there's a lot of value just in that alone, aside from, the extra links that we go for like every day, right, in the private group. So yeah, with that being said, God bless. Let me know if you need anything, and I will catch you beautiful people in my private group bright and early tomorrow. And you guys here on YouTube, I will catch you guys on Sunday and pretty much all week next week. Okay. So yeah, have a good rest of your day, you guys. Okay. Let me know if you need anything.